In Stan Shamu, who joins us from IG in Melbourne. Billabong shares, a bidding war, of course, is always going to push up the shares, but they're still quite a bit below that $1.10 offer price. How are you reading that market reaction? At the moment, they're sitting on 95 cents.
Yeah, of course, at first we're expecting the initial reaction to be a bit of short covering as some of the traders scrambled to cover some of those shorts after the recent bearish sort of stance on the stock amongst investors in general. Of course, having missed out on a few takeover bids in the past, it certainly seems like there's not much confidence in the stock at all. But of course, with this coming in, I think it will spook quite a few short sellers who are in place there, just hoping for a firm move lower in Billabong shares, particularly if those books just reveal some cobwebs that investors or analysts aren't too happy with. But at the moment, I think what will prevail will be short covering. Of course, there's still a lot of concerns. They've opened their books at the moment, so that will probably see it continue to trade at a discount. We've got Credit Suisse coming out saying they're upgrading the stock now to an outperform from an underperform, raising their target from 38 cents to $1.10. So that's quite a bit of a change. Of course, once there's a takeover, it's really hard to fight the target price there. But at the same time, this will probably be the tone we'll see across the broking space, where everyone continues to show a little bit of confusion around the stock. I mean, obviously, from a performance or any earnings perspective, it's not a great play at the moment. The only way to play it would be from a takeover perspective, and if that's not going through, then it's almost a binary event for the stock. So yeah, that's probably the outcome we expect. Should the due diligence process go through without any problems, then of course we could easily see the stock back up to that $1.10 mark. But I think we'll probably continue to see more skepticism weigh on the stock, and probably continue to trade at a discount until we get a bit more clarity on the due diligence process.
And what clarity will investors be demanding with Rio to get these shares back into the black this afternoon, potentially, because we run the risk of testing 4,700 if not, i.e. one-way traffic south?
Yeah, in terms of the miners at the moment, of course, we've had the iron ore prices being the main play for investors, but of course they've been lagging for a while now, so we'll probably start to see a lot more company-specific information being used to analyze some of these iron ore players, having gone back to fair value, so to speak, and most analysts starting to feel they might underperform in the near term because of the recent big run in their share prices. So we'll probably need to see a near perfection on the output or production end. We'll probably want to see them meet guidance and potentially make some comments alluding to the fact that they're still happy with their output rates, and they will continue to produce at the same rate that most analysts were expecting over the past year or so. So that will probably be the main factor for Rio later on. Of course, we've got Rio trading slightly lower at the moment, so there might still be a little bit of doubt in the stock. We've got BHP a touch higher, so that really does give a very confusing lead for the material space at the moment. Gold names are, however, enjoying a little bit of relief today. They're up a touch. We've got Newcrest up over 1%. We've got Medusa up over 3%. So that's mainly because of the slight recovery we saw in the precious metal overnight. Apart from that, everything's quite a mixed bag today, and we'll probably need to wait for a few more leads from the rest of the Asian region to kick in before we can see what exactly is happening with equities.
Which markets in particular? I mean, Japan's Nikkei is already in line. That's shooting out of the starting blocks, up by 1.1%. Yesterday, Shanghai Composite Index was up 3%. Could that help to support us today?
Yeah, with Japan, I think that will continue to be the main factor for the region. Of course, especially with the BOJ meeting coming up next week, that might be a game changer for the region. But as it approaches 11,000, the Nikkei that is, and the dollar-yen approaches 90, you can always suspect that skepticism will kick in at some stage, and we'll probably see nervousness holding at those levels. In terms of China or the Shanghai Composite, they had a big run yesterday, but I don't think that will continue much longer, considering the gain was mainly on the back of a change in the quota for international investors holding China A shares. So that might not be something that will continue, that will see follow through buying today. and we'll probably continue to see that sort of consolidation phase for equities. The focus will switch to the US dollar as well, and that might dictate sentiment for risk assets heading into the end of the week. Of course, following those Ben Bernanke comments, at the moment it does seem like he came in very neutral, and it hasn't really had a big impact in the FX space, which has basically been muted so far. But I think for all intents and purposes, he's not in any rush to pull QE. He did say until he sees that sort of strength in the jobs market, I don't think that it will be going away anytime soon. Inflation doesn't seem to be a big concern for him, although he did try as much as possible to be neutral in typical fashion. But it does seem like QE is still here for a while until we get significant improvement in the US jobs market.
Stan Shamo from IG in Melbourne, thanks for this morning. Thank you.
Cheers.
The US government could run into trouble soon.